Good evening, everyone. The stock market's closing numbers don't tell the whole story of what happened on Wall Street today. It was a pretty bleak morning, with the Dow plunging 180 points at the open, but then rebounded by the close. There was nothing normal about the volatile trading session today. Investors dumped stocks on scary news from Europe about the financial health of a big but relatively little-known bank in Portugal. Banco Espírito Santo had missed some of its debt payments that stirred up worries of a repeat of the European banking crisis from a few years ago. But then comments from many market pros here in the U.S. all day long reassured investors that the fundamentals of U.S. and European markets had not really changed, and stocks made a U-turn. By the end of the day, the Dow lost 70 points, the Nasdaq was off 22. The S&P slipped only 8 points.
Today's losses on Wall Street followed a big sell-off over in Europe, not only because of worries about the health of Portugal's financial system, but also on a slowdown in manufacturing across the continent. That renewed concerns about just how far Europe and its banks have come since the financial crisis. Karen Cho has more now from London.
It was a day of fear and contagion for European markets as investors were spooked by strains in Portugal's banking system and weak economic news. Industrial production in Italy slumped 1.2% in May, adding to woes this week about a soft patch emerging across the region. We saw the steepest falls across on the FTSE MIB and other peripheral markets. Now, the old fears flared up around the level of debt in European banks. At the epicenter, Banco Espírito Santo, the stock falling, as you can see on markets. Now, the holding companies of the powerful banking dynasty that created the lender are struggling to repay debt, and today delayed coupons on short-term loans. The intricate web around these holding companies in questions have reminded investors just how opaque Europe's banks are. Banco Espírito Santo's stock tanked double digits. It was suspended intraday, but has now lost more than 50% so far this year. The pain extended, though, to credit markets as well. A cocoa bond for Spanish bank Banco Popular was also scrapped today because of souring sentiment, and a sell-off in peripheral European bonds weakened demand for Greece's new issue of 3-year bonds. Despite high hopes, it's only the second time it's tapped markets since the international bailout. Well, today's washout on equity and credit markets has again raised questions about just how far along the road Europe has travelled to repair its banking system. For Nightly Business Report, I'm Karen Cho in London.